Welcome to Breaking News: The Trading Moves. Today we're looking at a corporate headline that one of you shared with us, and it's one that could have some pretty broad implications for the digital asset space. We're going to break down what it means and look at which specific sectors and companies might stand to gain and which might face some challenges. So the company right in the middle of all of this is Strategy Inc., which trades as MSTR.
Right.
And they're probably more famous at this point for their huge Bitcoin treasury than for their actual software business.
That's really the heart of the matter here. For a long time, the market has treated MSTR's Bitcoin holdings as basically untouchable, a permanent part of their strategy. The key piece of news we're looking at is that their management, for the very first time, suggested they could sell some of their Bitcoin reserves.
If market conditions change.
Exactly, if conditions become unfavorable.
And that one word, could, that's really what changes the whole narrative, isn't it?
It does. MSTR has always been seen as this kind of leveraged proxy for Bitcoin. But if they're hinting they might sell, that means they're a price-sensitive seller, just like anyone else.
Okay, let's start the analysis. So where does this leave the market? Let's begin with the groups that are identified as potential gainers first.
We can break it down into about three main categories of organizations that could potentially gain from these market dynamics.
Starting with, I assume, the platforms where all this trading actually happens. Why would they benefit from just an announcement?
Well, it's all about activity. Anytime a big institutional player, a whale, as they're called, makes a move or even suggests a move,
It creates volatility.
it creates a ton of volatility and trading activity. And these platforms, they make their money on that activity through fees and spreads.
Right, so it doesn't matter to them if the price goes up or down.
Not really. They just monetize the volume. The more people rush to adjust their positions, the better it is for the platform's revenue.
So which companies are we talking about here? The ones best positioned for this?
That would be the major crypto exchanges and trading platforms. Think Coinbase Global, that's ticker COIN, and also Robinhood Markets, ticker HOOD.
Okay, that makes sense. Let's move to the second group you mentioned, traditional asset managers. Now, this feels a bit counterintuitive. How does a crypto story benefit a mainstream brokerage firm?
Yeah, it's a good question. It comes down to a concept called capital rotation. The thinking is that if investors suddenly see these leveraged Bitcoin proxy trades as being too risky,
Which this news definitely implies.
exactly, then that capital might start to rotate out of those positions, and that money often finds its way back into, more diversified portfolios and established platforms. And that rotation benefits firms that specialize in rebalancing portfolios and giving advice.
So we're talking about the big established names.
Right. Names like BlackRock, ticker BLLK, and Charles Schwab, ticker SCHW.
Okay, so a flight to perceived safety.
Yeah,
And the third group is connected to market instruments that really thrive on uncertainty.
precisely. We're looking at exchanges that facilitate volatility trading. If this news pushes up demand for options and futures contracts tied to Bitcoin proxies and tech names,
Which it almost certainly would.
it supports the exchanges that list and clear those kinds of complex products. They get a piece of every transaction.
And the specific names to watch there.
That would be Cboe Global Markets, ticker CBOE, and Intercontinental Exchange, ticker ICE.
All right, now let's turn to the other side of this. The groups that stand to lose if this potential sale happens, or even if the market just reacts badly to the possibility.
The first and most direct category affected is the group of companies that basically copied Strategy Inc.'s balance sheet strategy.
So what happens to that whole narrative they built around corporate Bitcoin treasuries?
Well, if MSTR actually sells, it really hurts that story. The one that says operating companies can hold huge amounts of Bitcoin without ever facing pressure to sell.
This announcement just casts a lot of doubt on that whole idea.
It does. It puts any company that's focused on that model in the crosshairs. So obviously Strategy Inc. itself, trading as MSTR.
And others who hold large amounts.
Yes, like Tesla, which trades as TSLA.
Okay, so the next group is the Bitcoin miners. They're highly reliant on the price of Bitcoin. How does this impact them specifically?
It's a bit of a double whammy for them. A weaker Bitcoin price, combined with the fear of a large corporate seller adding supply to the market, it squeezes miners from two directions.
Okay, break that down for us.
Well, first, the value of their inventory, all the coins they've mined and are holding, that value goes down.
And second.
Second, equity investors start to demand a higher risk premium for holding their shares because of all this added uncertainty, so their cost of capital goes up.
That puts companies like Marathon Digital Holdings, ticker MARA, and Riot Platforms, ticker RIOET, in a tough spot.
A very tough spot. And the final category here involves investment products that are designed just to track the asset.
You mean the spot Bitcoin ETFs and the other listed Bitcoin funds?
Correct. These products are, by their very structure, long Bitcoin. And so any pressure from a major seller like Strategy Inc. translates directly into a drop in the fund's net asset value, its NAV.
And that could potentially lead to shareholder outflows.
That's the risk. People see the NAV dropping, they anticipate more selling, and they pull their money out.
So you're talking about products like the iShares Bitcoin Trust, ticker IBIT.
Yes, and the Fidelity Wise Origin Bitcoin Fund, ticker FBTC, they're on the front line of absorbing that kind of direct selling pressure.
This look at the potential market reaction really shows how connected the actions of one big company can be to the dynamics across so many sectors, from crypto exchanges to traditional asset managers and even mining.
And it brings up a critical question. What happens to that valuation premium that's been attached to companies just because of their Bitcoin holdings? If that no-sell commitment is permanently off the table, how do you value them?
This is just a different way of assessing risk across these corporate treasuries going forward.
I think so.
So you now have the full breakdown of this headline, the rationale for these predicted market movements, and all the companies involved with their tickers. That's COIN, HOOD, BLK, SCHW, CBOE, ICE, MSTR, TSLA, MARA, RIOT, IBIT, and FBTC.
And before we wrap up, just a quick reminder. Please remember that the information we've discussed is purely the opinion of the author of the material we examined today. This discussion is for informational purposes only. It doesn't constitute financial advice or investment recommendations or an offer to buy or sell any security. Always, always conduct your own research before making any investment decisions.